In the prior session, we showed that 3 to 6% of invoice value is typically at stake if you are not properly reviewing your Amazon deductions. In this session, we will cover the basics of EDI-based order-to-cash processes and why the Amazon Marketplace is hard for financial operations to deal with, particularly the economics of dealing with large data volumes with a wide spread of deduction values, which, as you'll see, is a mixed blessing. In a perfect world, Amazon's vendor procurement process is relatively simple. 1. Amazon raises a purchase order. 2. Vendor either accepts or rejects the PO. 3. Vendor fulfills the PO and Amazon receives the goods. 4. Vendor invoices Amazon. 5. Amazon pays invoices to your bank. 6. You reconcile your bank statement with your invoices and close your books. But this isn't a perfect world. When Amazon receives your goods, it creates chargebacks for not meeting their supply chain expectation and shortage claims for any items not received at their distribution centers. When Amazon receives your invoice, they may also declare additional price claims for one of 10 reasons. For example, if a cheaper substitute item. They also take advantage of any payment term discounts for when they think they received the goods. This means that if they are responsible for lost, then found items, they take the discount even after the payment due date. Amazon also applies all agreement terms and generates a set of co-op invoices for the relevant period. Finally, they provide you with a remittance statement where all these charges are netted against the balance owed for a set of transactions, grouped by vendor code. So, why is this hard? The first challenge for vendors seeking to understand the deductions levied against their invoices is assembling all the necessary information. It is important for this data to be accurate as Amazon rejects disputes or settlements out of hand when your data does not agree with theirs. Let's first consider the number and scope of reports made available by Amazon to support the order-to-cash process. In approximate lifecycle order, we have on the left the relatively static master data for products in the catalog, the current and projected pricing for Amazon to order against in the Edit Item Costs spreadsheet, as well as co-op agreement texts. Next, we have the purchase orders and any chargebacks associated with lack of availability. Concerning the receiving process, we find separate shortage and price claim reports and further potential chargebacks, such as packing material. Subsequently, Amazon reports the invoices received and the co-op agreements invoices due. Thereafter, Amazon reports the status of all disputes and any associated cases following closed disputes. Finally, we have the remittances report, which is the rolling record or authority for Amazon payment and deduction decisions. What is not explicitly reported by Amazon is the difference between what you have on your books versus what Amazon has recognized via remittances. This difference often impacts your cash flow and does lead to surprises. These are the residuals that will not be closed until disputes are filed, cases are raised to challenge denied disputes, or some settlement is reached, usually after some negotiation between Amazon and the vendor. As you can see, the information is very fragmented and only fully available through the Vendor Central portal. You might also note that this information is presented by payee code. Imagine the multiplicative effect of trying to gather this information across multiple marketplaces and/or multiple divisional relationships, each with their own payee codes. Since a PO line item is for one ASIN to be sent to one of Amazon's many fulfillment centers, of which there are over 100 in the US now and expected to rise to 150 or so soon, there are lots of PO lines to receive against, and potentially lots of small shortage claims. Relative to the invoice, the goods receipts at each location are continually updated as the goods arrive over a multi-day period. This leads to a continually evolving receipt status until within 4 to 5 days of invoiced due date when any residual shortage claim against the invoice will be raised. To continuously understand the status, each PO and invoice status should be resampled at least weekly, ideally daily until finally closed. In addition to claims related to specific invoices, Amazon records all other charges related to a vendor in the remittance report. For example, monthly co-op charges or Amazon audit results. This data may prompt lookups of other agreements, catalog data, and dispute data. although such data volumes are small relative to the PO and invoice resample effort. The main drivers of download volumes are the rate of placement of purchase orders and invoices and the time period over which they are typically open. Even for medium-sized companies, it is very plausible to see 30,000 downloads per year for a company operating a weekly process, and all this is before deriving any value from the data. All this complexity has fostered a cottage industry of outsourced order to cash service providers. While these services provide a positive ROI and avoid the need for in-house expertise and labor, they tend to be quite expensive, often taking up to 30% of what they recover. And since they are probably optimizing their own labor utilization, they may focus on the largest and easiest opportunities in their portfolio, of which your company might not get their full attention. For example, if you had 10 shortage claims, one worth $1,000 and 9 others worth $100 each, an outsourced service might focus on the $1,000 one and recover 50%, and might leave the remainder undisputed because they take too long to prepare for an expected 50% return. The best practices for maximum recovery are at odds with the incentives and economics of a human-based process. The best practice is to submit lots of disputes that are easy for Amazon to approve in isolation. This is done by not grouping invoices together into a single dispute and not creating high-value disputes that might trigger an escalated Amazon review. The takeaway here is that if you want maximum recovery, you need a service that can cost-effectively chase all claims, big and small, effectively. Such a process won't employ many people, especially at Western labor rates. Thank you for watching our second session on why it's hard to audit and understand why your invoices never add up to your remittances, and thus why it's difficult to manage your Amazon account receivables. Up next in our Amazon Order to Cash Recovery series, we will take a first look at how Merchant AI's financial assistant automatically identifies inaccuracies, then raises and tracks disputes on your behalf, and how we produce an accurate open balance statement for chasing denied disputes with cases, preparing for your settlement negotiations, and internal reconciliation closing process. And finally, how Merchant AI's financial assistant provides you with a business case scorecard to track your order to cash effectiveness. If you would like to get started with a free review to understand your own opportunity, please contact us and get yourself on the path to better margins with some early cash wins up front.